The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Don't forget you can listen to us anywhere on your mobile phone on TFNN.mobi. And let's check out where the markets are at right now. We got the S&P is down 4.5 points. The Russell's down 2.5, with the Nasdaq down 1.25. Dow is currently down 76 points on the day. Oil down 35 cents after that bullish inventory report. It fell down, flew up, pulling back down a little bit right now. We got natural gas currently up over 2% on the day. Corn's moving a bit as well. It's up 7 points right now. That's 1.5% move on corn. And soybeans is up 9.5 points. Euro dollar currently down 8 pips. Aussie dollar up 24. Pound dollar up 64. Dollar CAD down 15. And dollar franc up 26, with dollar yen down 6. So a little bit of a mixed bag on dollar with various currency pairs right now. We got the euro yen is currently down 11 pips, and the pound yen is up 71. Gold currently up 13 points on the day. Silver is up over 2%. Nice solid move on silver right there. And copper is up about a little over 0.5% on the day. All right, well, that gets us caught up on the current market basically price action, where we're sitting at right now compared to yesterday's settlement. Let's go ahead and check out the news and see how it has impacted the markets and things that you could have done to take advantage of that, and what you can do to take advantage of the news reports coming on up. Well, got Aussie dollar up here right now, and talked about last night at 9:30 there's going to be some minor impact reports. There also was a New Zealand dollar report, but that's more for the New Zealand dollar, obviously. But we had the Westpac Consumer Sentiment Wage Price Index also came out. The Westpac Consumer Sentiment isn't really helpful because there's not really an expectation on it. So since there is not a forecast, the actual doesn't have a massive impact. They more look at it in comparison to other ones, but it's not a big impact report. That one came on out at 8:30. So we can see when the report came out, it came in better than the last number. We got a little bit of a move, about 10, 20 pips right here off of that right there, and then right into about 9:30. So if we go on over here to 9:30, and we pull that up, 21.30 right there, that really was more of the mover on the day. And we had the wage price index. That's the one that I said that look for maybe a 20 to 30 pip move on. We definitely got that move on it. The number came in pretty much a little bit less, but pretty much at expectations. So really just no major move. It just, added a little volatility to the Aussie dollar. Of course, it decided to go ahead and wake up this morning, and it decided to move on up to the 0.7 deviation level and fall right back off of it, hovering right at the 0.5 deviation. Now, if we go on in and look a little bit further, what we can see is we can look over here. We got Wednesday, and we got a little bit more price action going on. So let's check out the euro dollar. And we'll look at some of the things that happened on that. So right there on the euro dollar, and going into it, it has been just chop. So not much happened. We had the German preliminary GDP. That number came out, obviously a high impact number for, as a whole, but really we didn't see much of anything. Why? Well, it basically came in at expectations, 0.7 on a 0.6. And number came out at 2 a.m. You can see there's a little bit of a pop right there. But, we got a little up move, a little down move, but really nothing significant that was released. What was more important was the flash GDP that came out of Europe at 5 a.m. That number came in also a little better than expected. Despite that fact, we still got a little bit of a drop on the euro and a pullback up. So there's not a whole lot of action there. German bond auction came in. Actually, a little higher interest rate required. They had to pay 1.8. On an the previous number is 1.57, so interest rates ticking up a little bit over there. And let's see, what else we got on the euro? We also had a couple other things like the French preliminary non-farm and GDP, but those aren't near as high of an impact to worry about. Now, if we go on in, and a couple other things that we can focus on would be like the pound dollar. And on the pound dollar, we definitely got some moves. This is a pair that we talked about expecting some movement on. And let me pull up the details on that report for you, the stuff that I called out yesterday, and then we'll see how it played out today. And on the pound, let's see here. We had the climate count change. We had the MPC asset purchase facility votes. We had the official bank rate votes. They also had average earnings index and the unemployment rate. So we had 6 total announcements coming out on the pound at once. So you should have expected a lot of volatility. We definitely got it. The expectations on this were about a 70 pip move within 2 hours of the announcement. That's pretty much what we were looking for. And, it breaks 50 pips, pretty high percentage of the time, like 92% of the time it breaks 50 pips on this announcement. So let's see, how did that report actually play out for you to be able to do straddles or strangles over on Nadex? So if we go right here, right before it, we take it, we just drag this up here, we got this nice spike right up there. We got a move of 74 pips. And the stated goal was 70 pips. So it was a pretty much a perfect move that you could go into. And, if we didn't get anything, if it wasn't moving, of course, we'd look at, a break even. But you should have been profitable on that trade if you would have done a straddle or a strangle on the Nadex exchange. So the trade worked out really well, and just a really perfect stat trade. All right, so a couple other things. You could also look at retracements. The market often retraces after this report. So you got a nice retrace, and then looking to get out probably right at the 0.7 or trail your stop, one of the two, on the deviation levels right here. And trailing stop method, one of the simplest methods, is it takes a little getting used to, but once you got it, then it's solid. And basically, we just use the 10-minute deviation bars. So we get this retracement, we take an entry back in the direction of the news that came out. Climate count change came in better than expected. All the other stuff came in as expected, literally. So it all came in as expected. So as that was happening, that was positive, bullish. We hop in right over here on the pound dollar. And then how do we trail our stops on that trade using deviations? Well, it's real simple. Just look at the bar that closes above. Okay, it closes above the deviation. So this bar right here actually closes above the deviation, closes at 15491 with a deviation of 15490. That's your half deviation mark right there. So we're going to put our stop 5 ticks below that. Then it closes under it, then it closes above it again. So we can move it up, but we're talking like a tick, move on your stop there. And then we wait for it to close above the next deviation. Well, this one right here closes above the 0.7 deviation line right there. So when it closes above that, we're able to then move up the stop. And it doesn't close back below it, but we'll keep following it. It closes above the deviation right here at 1030. So you can tighten that stop yet again at 5 ticks below there. And let's see, do we get a close below and then a close above? So here's another close above right over here. So you can tighten that stop again. Again, it closed above, then it closed below, and without being stopped out, it closed back above the deviation line. Looks like actually right there. So we can tighten our stop right over here to 5 ticks below this. Our low on this bar is, looking at a low of 55.26. If we go on over, and right there we closed above the line. So 55.26 would put our stop at 55.21. And so we finally would have been stopped out on this trade. Very simple trade. But would have been stopped out right about here, 55.21 on this bar. So not a bad trade, and just sort of riding the pound dollar all morning long using nothing more than the deviation lines as a stop loss method after the spike, retrace, and then re-entry on the trade. So a very, very cool trade. Almost came back down to settlement right there as well. But I really gave you just a great setup to be able to go in and place the trade and follow it very objectively. So, because, it can be sort of hard. You start getting stuff like this right here, and you just want to get out. It's just going sideways, where you get a big spike up, and then it pulls back, and you're thinking, I'm out. But you got your stop. So you got your stuff protected. You're letting your profits run. And that is, one of the biggest things you have to do when you're trading is you really have to let your profits run. And the only way that I know to do that is to be very objective, to trade what I see, not what I think, to not trade based on my P&L, to not trade based on fear. And the only way I can do that is not over risk and have an objective method for trailing my stops. And so, because I have to have something, because if it's me, I'm going to mess it up. I'm going to take my profits too soon. I'm going to hold on to my losses too long if I'm, playing on my gut. And so I like to, 90% of my trades, I like to be system-based. And even the other 10% are more usually reasons not to take a trade or even to tighten a stop. But in this case, simply follow the objective rules and let the trailing stops take care of themselves. Okay? And it does require a lot of patience. I've talked to quite a few traders over the past couple weeks, and, we always know this, but I think one of the hardest things and probably one of the biggest assets and biggest weapons as a trader is your ability to be patient. And it's so, like you get so bored just waiting on something to happen that you hop and hop and hop and hop from one market to the next. And you end up missing out on the big moves because you're always what happens is you're stuck in another trade and it's a small loss or whatever, but then since you left the last market, it just had a massive move, but your money's tied up, so you can't go over and fix that trade. So it's better if you're going to trade a few markets, trade those markets. Place all the trades for your system on those markets. And it doesn't mean you can't hop between them, but it means don't miss out on trades on one market because you're trading another market. You just keep going around everywhere. Don't tie up too much money. Otherwise, you will miss out on those big moves. All right, well, that gets the pound dollar wrapped on up. Like I said, euro dollar was pretty flat on the day. And we can go in and we can look at, some other pairs like dollar yen and things like that as well. And let's see here. On the news trade, we were calling out different things yesterday. One of those, let's see, and it's not really the biggest impact, but just a number, I guess, to be aware of. We had the PPI come out this morning at 8:30. And, again, just not much there. Really probably would have been a great, potentially a great butterfly trade. But just not a whole lot on the PPI report. And I haven't seen consistent enough results really to trade it. But what you do want to be aware of, trading it or not trading it, what you want to be aware of is on that PPI report, the number came in at negative. Came in worse than expected. Came in at 0% on expectation of 0.4. That is weak for the dollar. So that should add some weight to any kind of dollar pairs out there. Dollar yen, dollar franc, dollar CAD. And dollar CAD, definitely been moving on down. We'll go ahead and look over on that one. Like I said, the dollar yen, this is one of the flattest days we've had in a long time. We had 2 deviation move yesterday on dollar yen. And today, we haven't even had a full, I guess we've had a half deviation, more than a half deviation from high to low. But we haven't hit like the half deviation at marks. Let's go over and look at dollar CAD. It's really been doing a pretty good job. We'll pull that one on up and moved on up to half a deviation and then down half a deviation. Nice, smooth trend. Great trades today. We'll look at a few more pairs when we get back. Stay tuned. We'll be back right after this. We'll also be checking out some other potential trades. Be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So right now we're checking out a potential gold trade right now. You can actually get in this trade for about $75 at the moment. We got about 7 ticks on it. We're looking at buying the 1333 contract. So as long as gold expires above 1333 here in the next 6 minutes, okay, then you'll be profitable on the trade. These are very fast trades, and you got to be you got to take them or not take them, pretty quick when they come up. Otherwise, they can change price so fast. The big thing is, number one thing, and I probably won't ever stop saying this, is you do got to exit if it hits your strike. So if it goes down, hits 1333, sort of ticking up, ticking down, ticking up, ticking down, just get out. You're talking a $25 loss on the trade, okay? You don't want the $75 loss. So $25 loss is okay. You can make $25 back a lot easier in one trade. So I just stress that point. So you want to be watching it. If it goes down, if it hits that, then you want to be just hopping on out. Yes, it could come back. Yes, it could be profitable. I've even seen them come down. I've got out. I've seen them go back up 7, 8, 9 ticks, and I've got back in again. I've made my money back in the exact same trade sometimes. But what you don't want to do is you don't want to be stuck in a trade you don't like. Also, if it's too close and you're right at expiration, just get out. We had 5 minutes left. It's 3 ticks away, 2 ticks away. You may decide you just want to get out of the trade. So if that's the case, then just hop out, okay? if you don't like it. So if it's not lining up, if it's not doing exactly what you're looking for right there, then you can hop out of that trade. So you got to be pretty on the ball and ready to exit the strike, and you take the loss. So I just it's one of those things. Trades will work, trades won't work. They go back and forth, but just don't avoid taking that loss, because it will get more and more and more expensive if you don't follow the rules. Okay. So on that one, you are probably, if you have got in already, you should have been out of that trade the second that it hit the strike. Okay, so you should have been out of that trade at $50. So most of those trades we do really well on. Every once in a while we get hit on them, but you just want to take that $25 loss. So you should have exited at approximately $50 on that trade whenever it went down. And because what do you know about these trades? On binaries, okay? That if you get in and it hits the strike when a underlying market is at the same price as a strike, that your binary contract will be worth basically $50. Okay? And so if it's going to be worth $50, then you can lose $25 to say make $25. And you've got a couple opportunities. I've seen this thing bouncing back and forth. I've seen it hit 50 just while I was talking just now. So you had more than one opportunity. You actually had a pretty good heads up the first time around when I was talking about it. But then another one came up, and it's actually went back and hit that price a couple times. So you had more than one opportunity to hop out of your trade. And I know it gets so tempting. People get in these trades, and they're like, man, but if it just moves up 3 ticks, then I'll be profitable. Yeah, but if it doesn't, it's going to take you 3 profitable trades just to make that money back. And wouldn't you much rather only have 1 trade be required to be able to make that money back? So it may pop up in the last 2 minutes. It may not pop up in the last 2 minutes. But, do you really want to play that game and just hope it is in the money? And, you really don't want to be trading on hope. You want to be trading on a solid, actionable plan that does work for you on a consistent basis. And something to remember, too, when going into these is you're trading the actual underlying settlement price, not just the underlying market. So they're actually going to take the last 25 trades. They're going to average 5 high and the 5 low, okay? Or, sorry, they're going to drop the 5 high and the 5 low. They're going to average the middle 15 contracts, and that's going to be the settlement price. And one of the cool things that Nadex does now, this is a pretty cool feature. Let me see if I can pull this up. I'll show it to you right here. Give me 1 second. I'll pull the chart up. Is they just added in the ability, so this is pretty cool, where you can, at the very bottom of the finder, okay? So right over here, you have the finder down here at the bottom, all right? And you got commodities. And if you go into it, then you can actually pull up the Nadex indicative underlying. You can go to gold, and they actually will chart for you. This is pretty cool. They will chart for you the gotta get pulled up. I'll pull it up after the break, but they chart for the settlement price. It's pretty sweet. All right, stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. And right now what we're doing is we're going in and looking at this gold trade. I want you to learn a couple things on this. And so one is you could have been, if you did stay in the trade and you didn't take your stop and you were lucky, and I will pronounce lucky, okay, then you were profitable on the trade. Okay, so the trade came back in the money, expired in the money, you made money. I saw several traders already say, I stayed in and it worked. Well, that's good that it worked. But one of the worst things that can happen for a trader, okay? One of the worst things that can happen for a trader is that they do something wrong and they get rewarded for it. Because that works great until it doesn't, okay? And especially if it works a few times for you, then you're more likely to repeat that a few times. And so, I'm going over here, I'm looking at this, and, people go, where do I get out on these trades? Again, if the underlying market hits your strike, then you're basically going to be able to get out for right around $50 on the trade. Okay? If you don't get out, you could end up losing like 70 or 80 bucks on the trade. And I know these numbers sound small when I'm saying them. You're losing 20 or 30 versus losing 70 or 80. You could be doing 10 or 100. I know people who do 200, 300, 400 of these at a time. Okay? They do them several times a day. So that those little numbers can become they can become like $5,000, $8,000 numbers. And so you really want to have your risk management totally in check and be willing to pull the trigger. Don't get in these trades unless you're willing to pull the trigger, okay? And I'm literally looking at this thing like tick by tick, and I mean, it flew right back up at the last second, came on back down, and one of the things you can do, and so hopefully you understand that, get out if it hits the strike. So it ought to be right around 50. And so what you can see right here, this is cool. They've added this in, and if for some reason I couldn't get the thing to open in demo, but over my live account I was able to get it to open up. And you can go in and you can even pull up the settlement charts now. So it's a pretty sweet thing. You can go and you can pull them up, and you can look at 4 hours. You don't actually get, they're working on getting all the data built in, but they're just now starting to store everything. So you even see the sort of the weekend gap. They need to pull that out of there. But that'll be another thing. I'll send that. Anytime I see anything like that, I'm like, you don't need, weekends being plotted on the chart. But let's see. And they also may have like gaps of data. So, but now they're starting to. They just actually plug these in to the platform. So now they're actually starting to plot everything in. Hopefully they'll get even more and more aware. I've actually seen that they're even now charting after hours, which is good, or when the market's closed, they're putting the charts in and stuff like that. So watch that, look at that. But they're improving these charts a lot. And like gold closes down at 5 o'clock on Nadex, but you still see the charts still quoting. And so piece by piece they're putting everything in here. But the cool thing is you can go down, you can look at you can pull up 5-minute charts, you can add stuff on, you can look at 1-second charts, you can look at tick charts. The tick chart is nice because you're really able to see right where it is, and it'll move really fast. I mean, this is only like a minute because it's every single tick on the underlying, but it's the settlement price. It's the price that matters, okay? Because what matters if you're doing these EPC trades is settlement. And I won't really trade off of this chart, but if I'm watching on the EPC, you're really concerned about that settlement price, I'll really be watching that settlement just so I can, be aware of, am I on track? Is it going against me, for me, all that. They also built it into the tickets now. So now if you go over here and you go to commodities binaries and you go to, say, gold, and then, I'll just open up a weekly one since that's what's open now because the dailies are closed. They built in the underlying indicative settlement price into the actual ticket. And another great tip for you, okay, is you can go over here. This is a really good trading platform tip. Go in, and you'll notice that you'll have your own watch list. You'll have my watch list. If you don't have any other watch list but just yours, okay, then notice how, maybe there's like nothing in that watch list or there's stuff in it. Oh, I have the FX pairs in there. Well, you can also go in and click on Nadex Indicative Indices, okay, and then do Add to Watch List. So I'm going to add each one of these to my watch list. I've already done this in my live account, so I did it in the demo so you can see what I'm talking about. And I just add all these to my watch list. This is actually the only thing I use the watch list for. And then I'll go over here to the Forex. Got all those already. I'll go to the indices now. Click on that. I'll go over here, and I'll add that to my watch list. Another big tip, a lot of people don't have access to foreign indices, especially the Nikkei, because this is not the CMEs. This is really important. It is not the CME Nikkei. It is the Singapore, okay, the SGX exchange, and those prices are different. And basically, you're probably going to have to pay to get access to this data. So if you don't want to have to pay to get access to it, you can use their chart that's built into the platform and at least have, like 5-minute charts or whatever, have something up. Yeah, they're having some issue on the data on the demo platform. But here, I'll show you over here in my live account. Let me pull that up. And we'll look at that real quick. Here we go. Okay, so once you've added them all, then now you can go down here to my watch list. Okay? And I have all of the Nadex markets in my watch list. And here's the cool thing. You can't do this, for some reason, on the Nadex mobile app. You can't look at these Nadex indicatives. But you can add them to your watch list on the browser and they'll show up on your mobile app watch list. So this is how to get these on the Nadex mobile app, sort of a little workaround, okay? And so now in here, you'll be able to see, I'll be able to open the charts. I should be able to open them without a problem over here on the live platform. I think they're just doing something on demo right now. But but you can go in, and now I can get this up. So if I want to look at, S&P, if I want to look at euro dollar, euro yen, if I want to look at Nikkei, whatever I want to look at on here, I can pull these up. And there we go. Now I actually have a chart on an indice that's very difficult to get a chart on. And I'm seeing the price that matters, which is the settlement price, because that's, what's going to determine my ultimate P&L. And this is a completely, tradable chart. So you can go in here, you can add all your technical analysis indicators, a lot of your classic ones on here. You can add in drawings right here, okay, trend lines, scan lines, all that stuff. You can add in, layouts. So you can make your own templates. You can save templates. You can update templates. Right here, I can save it, change it, whatever. And you can go and you can choose different, bars, like there. I go to bar type. So if I want bars or if I want something else, I can go in. I can look at bid. I can change that to bid and ask. So there's a lot of different things you can do to make different. Like that's a bid template. I have a bar template. I have just a regular template. But really can make anything I want to. So it's pretty cool. Just the ability to do that. Just do like account template right there, whatever. But you could make several templates for several different ways that you like to set up your charts, and then you just click on the buttons up here, and you can rename them whatever. So this is like my bar chart template. So if I click on that, it'll give me bar charts instead of candle charts. This is if I want to look at the bid, so I can bid template. Now I don't have to do that. I'm just showing you some examples. You can also just go over here and you can update the chart type, okay, to show your your bid or your ask or whatever. And there's there's settings right here. So see, like right here in the top right, little cogwheel, you can change mid, bid, ask, last. Now that's new. They just added last traded. That's pretty cool. They didn't have that before, so you can put that in there, and they keep adding more and more settings. And you can show or hide the grids. You can show the current price if you want to. Obviously, you're probably going to want to do that. And there's price data tooltips, like basically the data information when you go over it. So you're probably going to want that as well. And then you got styles, open, high, low, close, your mountain, you got your field mountain chart, you got your line chart, and you got your normal candlestick charts. And they have HLOC instead of OHLC, but I guess it's all the same thing. Right there, so pretty cool. But let's see, cursor, so you can do crosshair or circle. I actually like crosshair as my default. So, and let's see, last, I haven't actually, like I said, even really paid that much attention to that. So that's pretty cool. I guess, I don't even know if it's feeding yet, but it looks like that's a feature they're looking at adding in on them. So pretty cool. But anyway, so they add a lot of information in, and you can play with this and start using it. But the big thing is add all those to your default watch list. And it's a default watch list if you only have one. So otherwise, you're going to have to manually add it to each specific watch list. So I have my default watch list. Then if you want to have other watch lists, you can. But my default watch list is all of the main instruments. It's a simple tip, but it is a very helpful tip. So hopefully you'll take advantage of those new charts that they're building in, and as they're improving the platform and adding more and more features. And of course, we keep adding in more and more things as well to take advantage of these. I know one of the big things we're working on now, we'll have it done probably by September, middle of September, late September at the latest, is we're going to add in the ability to link to charts. So where inside the scanner itself, you'll be able to click on an icon, and it'll open the chart of not only the underlying instrument, like what we have right here, but also of each individual binary and spread. So we're basically trying to get all these charts built right into the scanner platform. And I'm pretty excited about that. I think that'll be just a really great addition. And we're going to do out of tickets, and I even want to figure out if there's a way, and as we're putting this together, that we can even maybe feed that chart just live right into the scanner. So that'd be pretty cool too. So we're just always working on layouts, for best use of space as well as functionality. So you got to have that good balance of functional but also intuitive, and putting the pieces together. And if you have any ideas, if you're a subscriber, you're currently using it, then just let me know. And we're putting a lot of stuff in here to, I think probably half the things have been just ideas and suggestions of other traders. And I really like to get all the input I can from other traders because it just makes the tool better for myself and for every other trader out there using it. And let's see what else we have going on. Let's check out a couple more of our deviations. Let's see where the markets are at right now. And we'll look at each one of them. Right over here, I'm going to close out these charts. Get rid of that one, and so over here, get rid of that one. There we go. Okay, so we got gold sitting up there at a 0.7 deviation level. We got, let's go ahead and look at silver. Silver on the day, still on the September future contract. And you can go in. Silver right now is up at 1 deviation. Okay, so nice, solid, perfect move right there to 1 deviation. And somebody asked me the other day, they asked, does news really impact the probability of breaking a deviation level? The answer on that is no, because the news is built into the deviations because our deviations are implied volatility based. So the expected movement with whatever news is coming out should be built into the deviation levels themselves. So they'll be bigger or smaller depending upon the day. If we go over, so we get a perfect 1 deviation move on silver right there. It's just sort of hanging out at that. It's closed down on the pit pretty much at the 1 deviation, the expectation of movement. We can go in. We can look at, let's see, I know we've been working on soybeans. We'll see if we get the soybeans ones up. There we go. They're up and running now. We had to add in some new updates, and but we got soybeans feeding, and we'll be adding a lot more contracts in as well. But moved on down here to 0.5, 0.7, sort of popped on back up to 0.5. So basically a perfect 1, almost really a 1.5 from high to low deviation move, but really just bouncing right off those levels perfectly and settling right out there at 0.5. And let's see, we got corn. Pull that one up, see if it's feeding in now. Cool, got that. So corn moved on, basically just bounced around, hit 0.5, 0.7, not quite up to 1 deviation level at the moment. And let's go in and let's look at, that's corn, that's soybeans. Let's check out our oil contract. We had obviously some volatility on oil today because we had the oil inventory report. And the report came in on oil. It was bullish. So if you go in and you look at the actual numbers, the number reported was negative 2.8 million barrels of oil. So a drop in oil inventory and lower than the expectation. The expectation was negative 1.4 million. And last week it was negative 1.3. So not only did we go down in oil inventory, but we went down more than last week, and we went down more than the expectation. So just sort of a triple hit right there. And so what happened? And this is a pretty intense day to trade oil if you're an oil trader. Like, this is one of those trades you really got to be aware of. You need to practice a lot. I'll share a few tips with you on trading oil inventory when we get back from this break. Stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Folks, welcome on back here to the Diagnostic Trading Hour, and just a few tips for you over there on oil inventory reports. One of those is you only really want to trade, personally, I only like trading in the direction of the report. I do wait on either, I got to get a confirmed entry, like I wait on pullbacks and I buy on the breakouts. So I usually want to do that. I also am very leery of when it gets back to where the market was at before the report came out, because usually it goes choppy after that, especially after lunchtime. So what they're going to do is this report's going to come out. You're going to see explosion in the direction of the report. All these automatic algo programs, inventory's down, buy oil. So supply down, price up. And then what's going to happen is those algos are going to stop, and then the big boys are going to come in. They're going to drive that market down, because you know what? Everybody in the world just bought oil because oil inventory was low. So they're going to drive that price on down and hit every single person's stop orders and knock them all out, because, they got guaranteed sellers. So look at this. I mean, they just went down and just bam, 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 bam. Got guaranteed sellers all the way down, because, all these buyers have stops here and here and here and here. Okay? Then they run out. And now what they do is like, okay, we got all those sellers, so we could buy from them lower, 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 lower. Then they're going to buy it back up pretty much right about to, at most, where the spike was, okay? So I got sort of like a couple levels. One is, where was it before the inventory report? Like right at 106.35 over here at 10:30. Okay, so right here, this is going to be my first, like, a be careful point. Okay, so right there. Yeah, 106.40, 106.35, right in that range. So notice it sort of, moves up to this point, hesitates for a little bit. I'm definitely going to be tightening stocks if I haven't already. My next point I'm going to go to is settlement, looking at this chart, because we do have settlement in the way, and we're within like a few ticks of settlement. The next point would be the high of where it was on the spike. So those would be the points I'd be looking at. After about 12:30, I stop on oil, okay? Because I expect it just to go chop and be a mess and be very difficult to trade. So I'm not taking new entries. Really 12:30 or so, because, especially after the run up, I'm not going to take any shorts, period. And I'm only looking at taking longs, and it just because the inventory report was bullish. Now, I'm not just going to buy because it was bullish. I have to get my entries. I got to use my stops. I got to use my trailing stops. But I'm not just going to just, really buy into it. So I'm not going to try. And also, look for, if you get the spike, be ready to, take your profits. And also be aware of very often they will pull this thing back and then retrace it. And so you're probably going to get stopped out if you have stops sitting down here at all, because everybody has stops right here. And it's just how the market movers move the market. Let's see, looking on over at the indices, we'll do a quick wrap on those right now. They're sitting at the 1 deviation levels. They're probably exhausted at the moment for the day. We'll see if they go any further, but look at that massive volume spike we just got right here, right into 1 deviation, closing out, big boys closing out a lot of their big positions right there at 135. I'd be looking to tighten my stops pretty soon. Wouldn't necessarily be looking to go long off this, but I'd be cautious about just diving in head first short at this point. So definitely be trailing your stops to the downside as this continues to move on down. But we are at a 1 deviation on the Dow. Let's go ahead and look a little bit at the other indices before the show wraps up. We got the Russell. On the Russell, we're just sitting in no man's land. So pretty tough trade right there on the Russell right now. Dow is a lot prettier to look at. We're going over to the NASDAQ. And looking at the NASDAQ right now, we can see it move down to 0.5. We're almost back down to that 0.5 deviation level again. So again, tighten those stops up. Also seeing that big volume spike right there. And then one last one, we'll go ahead and look at the S&P. So on the big boy, the S&P right now, sitting at 0.5, not really breaking it with a lot of conviction. And we got that big spike, big boys closing out positions that were short. So be careful on, tighten those trailing stops up. All right, y'all have a great day, safe day. I will see you tomorrow. Stay tuned for another great show right after this.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.